Good morning, good afternoon, and good evening. It's January 26th, Thursday, 6:03 p.m. here in Texas. And how's it going over there, Wowie, in the Philippines?
It's 8 a.m. here in the
Wha-
Philippines.
What a
It's
time
Saturday.
difference.
Yes. I'm glad we could make it today for this podcast.
I
There's
know
some
there.
a lot of exciting things going on the market.
Yes, and it's been a while. It's been about a month at least since we last recorded. So I'm pretty sure
Yes.
some of the followers, at least, would like to hear some of our thoughts. But before we head into that, just for our listeners who are just tuning in, so this is episode 66, and this is our first ever recording for this year. And Maui is enjoying his vacation over there in the Philippines. Tell us, how is it like after? How long has it been since you've been there, Wawi?
So I got here New Year's Day, January 1st, and I got to see Boracay
Nice.
and got to stay in Quezon City mostly
Hmm.
and saw a little bit of the country. And all I know is a lot of progress is going on in the Philippines. A lot of
Hmm.
infrastructure projects, and as you could tell on the news, the Philippines, broke records on their GDP and economic performance.
Right. We're gonna
Uh,
tackle that in a second as we have an article from Financial Times, I think. So for those who are not aware, Boracay is a tourist destination in the Philippines, known for its white sand and clear waters, clear blue waters on the beach. So I think it's well worth it. Back in November when I went there for a couple weeks as well, I stayed in, I think, Station 2 in Henan Regency, and they have the best
mhm.
breakfast, Filipino breakfast. That was included in the package that I didn't know. I only got to
Yeah,
enjoy it on our second and third day over there.
yeah, nothing better than free breakfast. I got to
Mhm.
meet one of the owners of the one of the hotels there.
Nice.
Shout out to Mr. Alex Lim of Farah Hotel
Farah
in
Hotel, right?
Boracay. Yes.
Nice. So you had a great vacation over there, at least in Boracay.
Yeah, yeah. The weather was cool. I think we went to visit an island and we got to comb the beach and enjoy the food there.
Hmm.
Um, I can't remember exactly. We did a lot of things, so I guess I'll just tell you
Yeah,
uh, off the podcast
yeah.
what we did.
All right. And I think they're trying to build an airport now in the Boracay Island itself. So that'll be nice instead of like jumping, hopping on boats just to get to it.
Oh yeah, so right now we have an airport in Caticlan.
Mm-hmm.
So there's different projects, as you mentioned, an airport and also a bridge connecting Caticlan to Boracay is in the offing.
Yeah.
I spoke to some of the natives there, the Tumandoks from Puka Beach,
Wow. Mm-hmm.
and some of them have been relocated to Caticlan because of some land issues.
Mm-hmm.
But anyway, they told me that they're gonna build a bridge to connect
Wow.
the island from the main island. We
That'll be
did a
better.
roll on, roll off, yeah, travel going back to Manila, so I got to enjoy, uh, the shipping industry and how it's continually servicing the Filipino people, and I think there's a lot of opportunities there too
Oh yeah.
for growth.
Mm-hmm. So jumping on to our weekly that we have missed for the past month. So we are not your typical registered financial advisors, but we delve into stocks and the latest news around Wall Street, trying to, convince ourselves that investing for the long term in the stock market is good for you. So we tackle the sentiments. So basically, we take a look at some gauges that would suffice to show what the ongoing belief in the market is. So, according to American Association of Individual Investors, that does surveys on a weekly basis, as of yesterday, there are a little less bullish investors compared to bearish ones. From 31.0% last week, now we're down to 28. And from 33 bearish investors, 33%, now we're at 36.7. But if you're going to take a look, we're still higher than the first week of this new year in terms of bullishness. So a lot of people are still bullish on a bullish camp. And it could be, would this be like a new year, a new trend compared to last year's where we just sold off beginning of the year? What do you
That's
think,
a good
Wally?
question. That's a good question, Mark. But we do saw some sectoral movement towards the Qs. So you saw Nasdaq go up, led by Tesla yesterday. But according to experts, we're still on the late cycle of the economy. So what they're saying is China is already ramping up.
Mm-hmm.
They were ahead on the late cycle,
Right.
followed by Europe, and then the United States is trailing behind those two regions.
Yeah, well, China just
So
opened up with they stopped their zero COVID policy and finally opened their doors regardless of the rising infections.
yeah, so they're about to come to their early cycle of
Mm-hmm.
their business cycle, and the US is just trailing behind that. So we're still not in the clear when it comes to fear of recession, and that's evident on the sentiments that we're seeing.
Yeah, well, if we're gonna take a look at one of the ETFs for China, like exchange traded funds, it's like a representative of a whole index containing China stocks. It's up nearly 14%. This is a K-Web or Crane Shares. 14% since the start of the year, and it's nearly double
Yeah.
from its low back in October, 90%. So people are loving the reopening in China, and this signifies that we just had celebrated the Chinese New Year as well, coming off a weekend, and it turns out to be betting bullish on China has rewarded the investors very well so far.
So better fill up those red envelopes. Happy Lunar New Year for everyone.
Ang Pao is what they call it. And speaking of Tesla, like what you just said, Huawei, Tesla is up nearly 11% today alone because of their earnings release yesterday, after hours, which is really impressive because they've beat like a lot of expectations. And Elon Musk just came out with an earnings call that he believes that Tesla could, still deliver one of its best years this year so far. So that'll be nice.
So
Tesla now at $160 a share. Whereas I think Huawei, when you were at the group telling everybody that you're buying, it was around close to $100 a share, right?
yeah, well, I've been buying it all throughout.
Mm,
It's still not yet back at its peak of 300 something, but
right.
I've been buying throughout the downturn, and now I'm seeing, oh, that was a good move.
Yeah. So like right now, since the start of the year, at least Tesla is up nearly 50%. So if you bought Tesla January 3rd when the markets opened, right now you have gained 48%. And kudos to you, whoever you are, including you, Huawei, because you bought around $100 a share. So if we're gonna
Yes,
take
sir.
yeah, if we're gonna take a look at fear and greed index, currently we're in the greed territory, whereas about a month ago we are at fear. So tides have changed so far since December. Maybe it's because of new year, new trend, but this is another graph that we take a look at, me and Huawei, identifying if the S&P 500, the index as a whole, is getting more bullish or bearish. So since the start of the year, as you can see, the market has climbed up past through its 125-day moving average, or which is about a good 4-month average, and it hasn't looked back except for that dip back in January 19th. And one of the longest times that we have observed that this has occurred is back in November to mid-December. So that was about a month, at least 4 or 5 weeks of bullish trend. And one more thing, Maui, that I've noticed here on this spikes above the 125-day moving average are back in January of last year, we only felt it a couple of times, a couple of spikes, and then it just sold off after that. Back in March, another couple of spikes, not even lasting more than 3 weeks, and then it went all the way down to June, and then it went back up again, spiked through August, at least from August 8th to August 26th. So that's about 19 days, nearly 3 weeks, and then it burst down again. And then the longest one was the recent one, back in November 10 to December 16. So a month and a week. So right now we just burst through it January 9th. So if we're gonna think, we're gonna assume that the market will do the same thing or even better, now that people are thinking that the Fed would be taking it down a notch. I think while correct me if I'm wrong, I think they're just gonna raise the rate to at least 25 basis points, which is a little less than its usual 50 to 75 basis points rate hike. So
Correct. And I think that's what the market is pricing in.
yes,
And if I'm not mistaken, they already priced in a slight recession
right.
mid-year.
So by mid-year, but right now as we're looking at the chart, we just pierced through the 125-day moving average on January 9th. So if we're gonna give that at least a month and a half, in my estimate, as the next trend, because I could tell in my best estimate or guesstimate that at least a month and a half from now we'll still be up on an uptrend. So we're not gonna see any downdraft at least until by the end of February. So that's my best guess. But you know, Morgan Stanley is still pitching out there that we're gonna see a tremendous sell-off, and it might reach 3,200 or even 3,000 level at the first quarter of this year, and then we're gonna see a turnaround. So so if that's the case, then we better pack our bags and sell everything. But as a long-term
Mhm.
investor, it's hard to time the market.
Yeah. So that's in contrast to what some uh, what do you call this, financial analysts are saying. So some of them are pricing in like a 12-month ceiling on the S&P 500 at 4,500 points.
Wow. Yep.
So some
Definitely a
are
lot bullish.
optimistic.
Yep.
Yeah, but you have to figure out where they're coming from. So you got the bankers telling you one thing, and then you got the investor analyst, saying something.
Mhm.
But I think it's good to stay diversified in this current market. And if you look at the current SPYV, which is the value ETF, you could see that it's on the uptrend. So it's a different market right now where value is going more favored in the market versus our growth stocks. So it's just
Yep.
a balance between growth and value, I would think.
Yeah. I think that's the case. And now what I've noticed is Google, all the big companies, all the big tech companies are slashing out their employees by the thousands.
Mhm.
Tens and thousands of employees are being fired left and right just to deliver those profitability numbers to Wall Street. Because right now, I think it's no longer the employees who could ask for bargains among the employer employee type of situation. Now it's the employer who's able to cut jobs. Not so long ago it was the Great Resignation, but right now most of these employees have no choice but to be fired or let go because of the um, economic situation where investors are now demanding profitability instead of growth. So much more of
Yes.
being recession aware and where's the
Mhm.
security or where's the cash or cash flow is king at this point in time. Meanwhile, on the overall market, the volatility has been going down. It's been down for the past 5 days, for the past for the past week, 8.5%, and for the past month, it's down 14%. So not so much of a of what do you call this? An earthquake happening in the volatility markets, meaning that the S&P 500 is actually enjoying its ascent so far. Um,
Mhm.
and for the past week, we're looking at each and every sector actually in the US stock market are in the green. The best performing is the technology since the announcement of cutting jobs left and right. That's going to save them millions and tens of millions of dollars, if not billions, altogether. So technology is the best performing sector, believe it or not, for the past week, whereas last year is the worst performer. And for the past month, so it's a little early to look at this, but we're almost at the end of the month, January 26th. So only three sectors are in the red. And these are, interestingly, these are the recession type of companies that you might want to hold when, there's time for uncertainty. So consumer defensive, by the name itself, is the worst performer since the start of the year. Utilities as well, and healthcare, which is, which has been reliable despite the recession or whatever that happens during uncertain times. Which is interesting, right, Wally? Now that people
Uh,
are, if people are planning for recession, it should be
mhm.
otherwise. But it's the total reverse for Wall Street.
Well, right now, exactly. So it's the signaling of the Fed, and the current economic indicators are dictating such moves from retail investors and hedge fund managers to shift back into technology and these other sectors that were down graded.
Yeah.
Um, but uh, it would be good to be still conservative, of course. So I would just keep watching
Hmm.
and just stick to your convictions.
Right. And if we're gonna take a closer look on the fund flows, where's the money going? We have the Reuters report that does its weekly updates, usually on weekends. So this is published on January 20, last weekend. Global equity funds post second weekly inflows in a row. So that's the second week that stock markets around the world have received a lot of funds. 5.24 billion inflows during the past week alone, a tad higher than previous week. So investors or Wall Street is not fearing, whereas they're putting their money to work in the stock market globally. However, most of the inflows went to European stocks as investors were chasing the region's equity
Mm-hmm.
markets, which were more battered last year. So there are probably investors are looking for cheaper trades, value trades, like what you said, Wowie. They're in Europe instead of the US. So European funds received $7 billion. Asian stocks obtained $1.2 billion, and the US stock market actually faced outflows, believe it or not. 3.13 billion came out of the US stock market. So I guess globally, investors are still fearing that there would be a recession in the US. So they're pulling out a lot of money from the US and flowing it into Europe.
Yeah, exactly. That's the trend that I was hearing about, listening to some analysts this morning. So Italy is a beneficiary of this recent trend, as we can
Mhm.
see a lot of movement into Italy, inflows there. Um, but it should revert back to the United States here once I think once the Fed uh, does their 25 BPS rate hike,
Yep.
there
We're
should be a
gonna
positive response there.
Yeah, we're definitely we're gonna look at that come, I think it's next week, right? When is the next Fed meeting?
Yeah, yeah. Next week, likely.
January 31st
Any
to February
anyway,
1. Hmm.
yeah. Anyway, you should see that unless there's another black swan event that comes up, but that's less likely now because Europe had the very mild winter, So what we feared was, an energy crisis,
Right.
but it didn't pan out. So
Yes.
so far so good.
That's actually a good point,
The
Wawi.
winter, the winter went to Japan.
Oh, yeah. Everybody was fearing that
There's a blizzard in Japan.
there is. Oh, wow. Yeah, but everybody was fearing for Europe to run out of fuel by winter time, and they would need, a lot of gas. But good thing they prepared very well, as the weather has changed, I guess. Meanwhile, global bond funds
Hmm.
also received their third consecutive week of inflows. So a lot of money also pouring into the bond market. Global corporates receive a lot of money, 3.7 billion. High yield funds luring 2 billion.
Yes.
And then government bond funds,
Yes.
12-week low to 4 million. So not so much money going into government bonds, but more on the corporate side and high yield.
That's what I saw too, which is a good signal in my opinion.
Yeah. And investors sold a lot of
Yeah, going back into corporate debt.
yeah. Meanwhile, then on commodities, investors sold 222 million. So global money market, on the other hand, also took a dive for the first time since the start of the year. So money market is like cash on hand. So it looks like some of the investors finally decided to put their money to work. Um, oh, emerging market, Huawei, looks like showed equity gains of 6 billion,
Yes.
$6 billion.
Yeah.
Mhm.
That's what I was thinking. That's another thing that came on my radar, but I just forgot. Yeah, it's true.
Yeah, to record their biggest weekly inflow since February 2021. So a lot of investors are pouring their money in the emerging market as well. So that's one
And
thing
Europe, and
in
Europe,
Europe. Yeah,
and European markets.
yep. And like what you said while in the beginning, the Philippines record strongest economic growth in over 40 years. Believe it or not, lifting of pandemic restrictions boys Southeast Asian countries set to enjoy China boon. So the Philippines
Hmm.
is now at its strongest economic growth in more than 40 years. It's just amazing. It recorded it grew 7.2% in the fourth quarter of 2022, beating economists' expectation of 6.5%.
So a lot of interesting infrastructure projects here. Railway and two airports. Uh, in Luzon, uh, international airports being projected to be completed here uh, a few years from now. Um, a lot of growth in the Philippines. So this is an opportunity for the Philippine president uh, to change the trajectory of the Philippine economy. There's a great opportunity here to onshore manufacturing and other industrial uh, projects here. But I've been very keen on looking at the mining sector here, commodities. Right now, we're selling a lot of our copper ore, raw material very cheaply to China. And you can see the opposite on Indonesia, protecting and building copper refineries in their own country. I think the Philippines can do that.
And looking
And
at
also revive their steel industry because we have a lot of, yeah.
the index there at the stock market of the Philippines, I'm trying to see what's the overall PE ratio, or at least since the start of the year. The PE ratio of the whole index is 16 times. It's cheaper than the US. I think US is around 17 or 18. And it's down for the past year, down
Mhm.
1%. Not that big of a drop, but looking at the more fundamental basics of each and every company, I'm just going to highlight a couple of stocks here in investing.com based on their PE ratio. So a lot of companies, big names, are actually less than 10 times its price to earnings ratio. Lushutan Group is 3.6 times earnings. Megaworld is 5 times earnings. GT Capital, who runs the Toyota operation there in the Philippines, is 6.7 times. Metropolitan Bank is just 9 times earnings. LDT, 9.4 times. Globe Telecom, 9.2 times. Ayala Land, this is Ayala Land or Ayala Core? Ayala Corporation, 9.9 times. Pure Gold, 11.5 times. So there are a lot of cheap companies there in the Philippines. So maybe it's only a matter of time when those emerging market funds that just dove in over there last week find their way to the Philippine market.
Mhm.
Yeah, and going back now to the United States, the Financial Conditions Index as of January 20. So we're still at the tightening mode according to this chart. So despite the S&P 500 climbing and the situation and the markets are climbing, the condition index is still tightening, probably because they're trying to reflect uh, the anticipated Fed rate hike.
Mhm. Yeah, it's like everyone is just waiting for the Fed's permission before they put in their money on the U.S. stock market.
Yeah. And just going back to our previous statement about the technology sector, the best performers since the start of this week, the tech cuts, job cuts, have lifted their shares, their stock price shares. So when Alphabet announced that they're gonna let go of 12,000 or 10,000 employees or 6% of their workforce, their stock price have climbed 5.5%. Whereas Amazon cut 1%, their share price went down by 2%. Coinbase, 20% of workforce being let go, share price rose by 13%. Wayfair, they're going to cut 10% of their workforce, share price rose 20%. Microsoft will going to announce 5% cut. After that, their share price went down 1.9%. So it's not like a direct correlation, but on average, the higher the percent of workforce being let go, the better the stock price performance it is for the company, as long as it's in the tech sector. And here's just a graph of the industry profit forecast here in the US. So looks like we're still trending down in terms of profit expectations, which indicates a recession. If not, maybe, after the fact, after when it happens, that's the time that we're gonna realize, oh, sure, we were in a recession.
Yeah, so expect first half volatility, based on what I've been hearing and looking at. This first half would be somewhat volatile.
Right. And
But for just perspective for our group members, the first 2 months of a bullish cycle is where you get a lot of profits. So um, once we once we once we get over this first half, then if I'm correct, then we should see a bullish signal at that point. So when it happens, just expect higher rates of returns at that point.
true. And like
So
we've always,
I'm staying optimistic.
yeah, it's not bad to be optimistic for sure. Now that we have some fundamentals behind it, we're seeing fund flows going out of the US. So
Mhm.
if you want to be like a contrarian, I'm not saying you buy US stocks, but it might be a good time to accumulate some of the well beaten down big tech stocks, as I am biased to, as I am, heavily exposed to them. But be it as of May, the chart never lies. NASDAQ, which is tech heavy, is now up 10.11% since the start of the year. S&P 500 up 5.7%. Dow Jones is up 2.38%. So some trends showing up here. Tech definitely taking the lead. So at this point in time, you have any quote for the week, Wally, for our listeners? Any experience that you want to share as you're enjoying your trip there in the Philippines?
Well, all I can say to the group is if you just want to change your habits or mindset, you know, going going back home or uh, going to a different country will
Mhm.
definitely reframe your your mindset. So if you ever feel like you're stuck, just go somewhere else, and you'll have a fresh perspective.
That's true. Yeah. Taking time to think and rewarding yourself doesn't always hurt.
No, it doesn't. And um, seeing different things that normally you don't see, can change your perspective. And uh, I really like that. So just look at my book recommendations on the group. I base some of my, you know, my insights on these book readings.
True. And we appreciate that while you sharing that freely with us. So I guess
Mhm.
that does it for now. This week's episode, the first episode of this year. Please subscribe to
Yes,
us and follow us as we get better at this. We
like
appreciate
and subscribe.
you can subscribe. Thank you so much, Huawei, for sparing us some time before you enjoy your trip, the rest of your time there at the Philippines. Godspeed. Please take care. And to our listeners,
Thank,
thank you guys.
thank you, Mark, and thank you everyone for listening. Happy Lunar New Year.
Happy Lunar New Year.